So the S&P 500 rebounded massively on Friday. In today's video, we gotta look at what to expect for the overall markets. And I'm going to share with y'all a stock that is about to make a big move tomorrow, Monday. Okay? And how y'all can profit from it. We are also going to be looking at some of the stocks that I've mentioned in the last video. Now, let's dive into the charts. On Friday, actually no, on Thursday night, I mentioned in that video that I was a bit shocked that Amazon did not, how do I say this? That Amazon didn't save the market in a way. The reaction to its earnings was negative. But ultimately on Friday, the market opened up higher anyways, right? So that part was a bit shocking. That part was a bit shocking to me. But nonetheless, SPY went all the way down to 60 to 67.50. Great. We hit that first price target of 6,800 and then we dove a little bit deeper. Now, with the way things look, with how we broke above 6,900 again, that line, all right, what I expect for the market, I expect it to just chill in at this region and maybe even break through 7,000 again and test that upper line right here at 7,050. I say this because of the Dow Jones. Now, the Dow Jones has been showing a lot of strength relative to the SPY and the Nasdaq. The Dow Jones didn't drop that much last week. It only dropped a little bit. Like, it really held its own. Like, it really, really did. And then it formed a very nasty bear trap on the 5-minute. So, on the 5-minute chart on Thursday, we had this, right? I say it's a nasty bear trap because this is so clean to the short side. I was also short in Nvidia. I was short in Nvidia. I took a small loss. On the video. I saw this thing. I saw the Nvidia chart. It looked exactly the same. And I figured, let me take a small position just in case Amazon doesn't really save the market. Amazon tanked. Nvidia was also down here, just like DIA was. Just like DIA is right now, the way y'all seeing it. And then the next morning, it opened higher, like above my stop loss, and I had to get out literally at the open for Nvidia. And then this thing popped up and just kept running higher and higher and higher. Like, this is an all-day grinder right here. Now, if you look at the 4-hour, there is a bullish rectangle on the chart. It's quite clean. It's not something that I would bet against. There is that. Y'all see that consolidation between 485 and 496. It consolidated for about 2 months and then finally broke out on Friday. Okay, and with this, it's opening up higher, like by $1. I have an alert at 506. By the way, 506 is like the minimum that I think it can go. It can go much higher than that. But for the sake of this video, I'm just gonna say 506. Okay, and then when we get to 506, we'll see how it behaves. If it want to push higher, then we follow that trend. But if the market decides to throw us a curveball and continue downwards, right, then again, all that is for another video. But for now, the Dow Jones 506, the minimum it can go. 510 is where I would start being a little bit worried. Like I said, it can go a lot higher because it is clean. But the market makers can give us curveballs. So now the stock for tomorrow, which I do have actually. The stock that is gonna make a big move, strong move, is none other than Microsoft's. Okay. Now I want to share Microsoft with y'all for one simple reason. I shared it with y'all all last week, telling y'all that I was shorting this thing since the highs of well, not really highs, but since 433. Again, we have this structure right here. I got in short before the structure even revealed itself. I got in short after the earnings letdown right here, and then covered right here at 411. Right, price target was for 390. We got to 390. Then the overall market opens higher. Microsoft retests 390 to give a second chance to any of the shorts who haven't covered right here, just to cover right here before rebounding. Now, the structure that I see on here, which is happening at a good spot, is on the 5-minute. Yeah. And there is a bullish pendant on the chart right here. And the breakout point was 400. And then it closed above the line right there. Okay. Now with this, the price target for this one should be, it should run all the way up to at least 410. Especially when we look at the daily chart. First and foremost, massive drop. We're down by 28%, 29%, 30% actually. The gap on the left got filled, which is great. There's another one at the bottom at 367, but I don't think that's going to get filled tomorrow. Given the fact that the Dow Jones is looking really, really strong and the futures are green, right? So we're not expecting a bearish move tomorrow. No. Also, the moving average is kind of catching up to the price. So for tomorrow, you could see that gap on the left right here get filled, which I would love to see. The one at 411 right there. And if we're really lucky, like if the market is really kind to the bulls, we might see this thing go all the way up to retest this level right there at 420. But the market has to be really kind to us, and we gotta see big volume. The volume already increased from earnings, which is a good thing. All right. And like I told you before, when a stock does something like this, where it drops by more than 10% from earnings, the next quarter that follows is horrible. But the stock doesn't fall down in a straight line. Like it drops, and then it pops, and then it drops, and then it pops again, and then it drops, and it does that all for the next 3 months, right? That's how markets typically move. And us as traders, we're looking to make money at every twist, at every clean twist and turns. It has to be clean. You can't just go in like that. It has to be clean. The structure has to be there, and you gotta have good reasons to take trades. All right. Obviously, this one has a good reason. That right there. That's all they need. That's all the reason I need. So watch this one for a pop up to at least 411, at most 420. It will be sweet if it happened all in one day, but I don't know. We'll see. We'll see. Now, the next stock that we're going to look at is Amazon. The stock that was supposed to save the market but didn't on Friday. Now, Amazon didn't drop all the way down to 190. It fell. It opened at 203. Formed this structure intraday for a day trade all the way up to 210. But it didn't fall to 190. Eventually it's going to fall to 190. Move your alerts like I'm doing. The gap at the top isn't going to get filled completely anytime soon. I'm talking about this giant gap right here at 223. I mean, it could. This one, I don't think it will get filled anytime soon. This one is going to be saved for like later, all right? But a move like this while the market is pushing higher, and if there is a curveball, then we can expect a drop down to 193 again, but that's for another video. For now, everything is gonna push up slowly. All right, so just be on the lookout for that move. The next stock that we gotta look at in today's video is NBIS, because I gave y'all this one last time, and I thought it will close the gap on Friday, but again, the markets opened higher for some reason. Like I told y'all before, when Amazon dropped through earnings, this is how the market was looking. Like the bears look like geniuses, and for some random reason, market opened higher, right? Kind of screwed up the whole bearish thesis right there. So is it going to drop to 65? Yes. The move just got postponed, which is fine, because the moment it start rolling over, it's gonna make that move all the way through. Or maybe it plays games right here. It plays games all the way until earnings day, and then on Thursday, which is the 12th, we see this thing actually gap down to 65. And then all the bears who loaded up on puts at these highs will get rewarded at the bottom. That's the way that I see it. Could it pop up higher? I don't think so. The only gap I see is the one at 65. Yeah, if I was to bet on earnings, which I'm not telling you to gamble through earnings, but if I was betting on the reaction through earnings for NBIS, I'm definitely buying puts. Okay, that's my opinion of it. I'm not telling you what to do. I'm just telling you that this gap right here is not making me think otherwise. It's the only thing I can think of. It's the only outcome that makes sense given the structure right here and how frustrating it must have been for these bears to not collect their money either here or here. The market is not that ruthless. Like I told y'all before, this looks like what happened with Microsoft before the drop, right? What happened with Microsoft is that it started to drop all the way down to like 440, and then for some reason it started to rebound. Let me show y'all. We're gonna use this as an example, that way y'all can learn that the market isn't ruthless all the time, right? So first and foremost, we're gonna pretend that this is NIBS, or at least the future of NIBS. Again, this is to teach anybody who is a beginner trader, right? So we have the bear flag or the bearish pennant right there, kind of sloppy. And then the breakdown is what's supposed to happen. And we thought that, oh, this thing is just gonna go straight down to 400, right? It was looking like it, and then it bounced. So this is what we're seeing right now with NIBS. This is where NIBS is at like 85 when it flirted with the price target but reversed on us, right? So we got Monday, Tuesday, Wednesday, Thursday right here. So NIBS has earnings on this specific day. Again, just use this chart and you use your imagination. Use your imagination. So this is the reaction that I'm expecting, and this is where I think, this is how I see the bears getting paid on Friday morning after we get a bullish week this week, right? The reaction to NIBS should look like this. That's why I was bearish on Microsoft before earnings and after earnings. So NIBS, there it is. Resistance is way up here, right? So let me clean that up. We push like this back up to like maybe even 95. Like it could shock a lot of people depending on how bullish we get this week with the indices, right? And then earnings brings all of it down. Okay, so that's the game plan for NIBS. Now the next one that we gotta look at, somebody asked me to by the way, if you disagree with anything that I mentioned in this video, I'll meet you in the comment section. We'll discuss in the comment section. Now we're gonna talk about PLTR. And with PLTR, it did exactly what I told you all it would, which is to fall, right? It dropped down to 129. This is the spot where Dr. Burry should think about covering. Because I told y'all before, smart move to short with an average price of 180 with puts. But now that the stock is down to 180, this is where I would expect them to cover, because that was the price target. I told y'all this price target right here when we were way up here in the 180s, and we got there finally, right? So we'll see. He might put out like news in the next few weeks, maybe in the next few months, telling people that he covered. But this is the perfect spot to at least cover some and take some money off the table, because that was a great trade altogether. Now, where is it going to go next? I believe it's going to rebound, since again price target got hit, and a rebound up to 150 at some point this week makes sense. Now the question is it going to go lower? I think it will. We just gotta time it right. Like, I don't know how long the game will be played before we take another dive, right? I don't know whether it's 2 months, 3 months, 4 months. Eventually, it's gonna reveal itself, right? Our job is to just pay attention and to monitor the market and to make money in between every single move. And then when it's time for the big moves, like what happened right here, then we take advantage of it, right? But for now, this is what I expect, and this is a great point for any shorts who've been shorting since the 200s, since the 190s, to collect some money off the table if they haven't done so. This is a great spot. Now, it's my very honest thoughts on all of these stocks, and it is the end of the video. Again, I am not your financial advisor. Sometimes I am wrong, so definitely do your own research. Definitely do your own research before and make your own decisions. Don't forget to follow me on social media at Paul and Goodman Payrolls Lab. And lastly, don't forget to like and follow for more.